Hey, what's up YouTube? Welcome to the Live Econ Guy. In this video I want to talk about quantitative easing. So the Bank of the United Kingdom, the central bank, Bank of England, they're back to doing quantitative easing, and I want to share this article with you guys, and I'll leave it down in the description below. So essentially this is the Washington Post, and it kind of describes the root cause, essentially what happened. So there are these pension funds in the UK, and they've been essentially using this kind of an instrument where they're betting on low interest rates, low bond yields, and by doing that they've been earning some money. But now that the bond yields have been skyrocketing, they were essentially in a way liquidated, so they weren't able to meet their margin call. So essentially this is also something that's done by some companies and corporations here in the United States, like BlackRock. So that's kind of alarming. As I've mentioned, this essentially blow up was caused partly because bond yields kept going up. So these pension funds, they decided to sell some of these what are called gilts. So it's kind of liquid assets, somewhat like bonds. So they just decided to sell some of these to meet their margin call essentially request. And what that in turn did is it increased the bond yields even more. So the Bank of England essentially stepped in, and essentially they bailed them out. So um, this is huge because the Bank of England is also fighting inflation. They're doing something that we're doing here in the United States. So they're reducing the size of their balance sheet, and they're also increasing interest rates. This also happened to them before, but this was at a time when monetary policy was not tightening. So what does this mean for us? What does this mean for the United States? If something similar happens here, will the Fed essentially pivot so quickly and go in and start quantitative easing, start putting liquidity back in the system? I personally don't think so, for a variety of reasons. Number one, the Fed provided the Fed provided a lot of forward guidance. So they told us exactly what they're going to do for months. So banks, corporations, everyone should be positioned in a way to prevent a situation like that that could cause a systematic failure. Number two, the world is in a crisis. Essentially, there's inflation, war, conflicts all around. You look at what's happening in Europe, the situation is just dire. So the world demands a stable and strong currency. And the United States dollar is right now very strong if you look at the dollar index. So by by continuing to rise the interest rates and allowing the balance sheet to run off, it continues to support a strong dollar. So I don't think the Fed is going to pivot like the Bank of England did. Um, so that's all I have to share for today, guys. I'm going to leave a link to the article down in the description below. Let me know what you guys think. If you have any questions, please leave a comment down below. Thank you for joining me.